Welcome to the Second Bite Podcast, where we talk with top entrepreneurs and CEOs about creating valuable companies through creative transactions. Now, let's get started with the show.
Welcome to the second part of our interview with Justin Hayashi. I think you're going to find this fascinating. If you haven't watched the first episode, I would say go back and watch that. Great insight into deal structure, perspective on the industry and the future, and how much research that Justin and his team do about where they sit in the ecosystem and in the marketplace amongst competitors, and how they think about where the puck is going to be or potentially an exit at some point in time over the next few years. I hope you enjoyed this episode. Remember, if it can ever be helpful, or if you ever want to suggest a guest or somebody you think would be interested for the podcast, reach out, find me on LinkedIn, or send me a note. We want to come on the show. Thanks. Enjoy this episode.
Let me follow up on the M&A pipeline, because there's, I think, some people that envision, I already know a bunch of groups, and I think I might, that I think would fit, or PE's just going to show up one day and say, Justin, we're going to buy this company. Can you talk about what it is like with Insignia? And do you start from a whiteboard and say, where's the puck going to be? Where are we weak? What do we?
Yeah.
Go ahead.
Yeah. So, we every quarter we have a board meeting, just like we did with a VC
on
investor.
Screens or face to face?
Face to face. Yeah. So face to face, we're meeting in a room and we're sending, the 130 slide deck, a few days in advance. They read it, and then we don't go through the deck. We just talk through the most salient kind of critical topics and agenda items. In that deck, we always include a perspective on M&A and where we think the critical capabilities are that we'd like to bring into the business. Sometimes they're accelerating existing capabilities. In some cases, it's about net new capabilities. But we're putting together a thesis, and so it's not just saying here are the capabilities, but it's also like why we believe it's relevant. Who are the customers that have told us that these capabilities would be accretive to their engagement with New Engen? What we think are the industry tailwinds or headwinds in that space. So a pretty thorough review and analysis of that to ensure that, if we're going to put serious dollars behind an acquisition, we better do the homework and be serious about our opinion on that. Having said that, yeah.
I'm sorry, but who's going to then, does Insignia help with the hunting and sourcing of those prospects, or you have to come with your own ideas?
Yeah, they absolutely help. So they've got a team that is fully dedicated towards outreach and connecting with a number of agencies and businesses that sit under their portfolio or adjacent to their portfolio, including ours. And so they are working with us and refining that hypothesis of like what exactly makes sense for New Engen, and then go after that list, and then additionally, obviously connecting with great bankers like yourself, Tom, where you get a lot of deal flow, really interesting deals as well, and that are really relevant to us. And so making sure that we have warm relationships and cordial relationships with top bankers in the industry, and so that we're top of mind when these opportunities come to market, that we're at the top of the list. So they are definitely helpful from that perspective. Having said that, I also try to stay very kind of lean forward in, whether it's at conferences or just networking in general with my peers, both in terms of just trading notes, but also to on the prospects of if someday we do have the opportunity to combine forces and do something greater together. I want to be at the top of the list, or at least in consideration. And so it is heavily reliant on Insignia for sourcing, and then diligence is a whole separate beast that they're extremely helpful.
Yeah. So maybe as an example, since Donut was your most recent, can you walk through? How did that get on your radar screen?
Yeah.
Were they running a process? Did you knock on the door? Take me through the whole thing.
Yeah. So Donut was a little bit unique. So we had lost.
They do what, Justin?
Yeah, great. Yeah, let's start there. So Donut Studios. We used to be called Donut Digital when we acquired Donut, and now we reposition it as Donut Studios, which is now our creative arm under New Engen. So we've always had a creative team, a very digital first creative team under New Engen from really like month one of the business. And we combined that under Donut Studios, which is now represents all of New Engen creative. And Donut Studios was extremely and continues to be extremely well versed in social and specifically vertical format, UGC, short form video content. And that was a space that we thought was going to see massive explosion. So we did the deal in September 2024 for reference. So, called just over a year ago. And at that time, TikTok was, emerging rapidly. Yeah. But not what it was today, but it was definitely scaling. Reels was starting to poke its head out and get some traction. Video was becoming the kind of dominant type of content on social media platforms. And so eyeballs and attention going to video, therefore a agency and service that was highly proficient at delivering video content that drives performance was something that we thought was going to be extremely valuable. Donut Digital did exactly that. And they were founded by 3 ex-Honey people, which we also really liked. Myself being a former brand side operator, understanding the dynamics of scaling a brand, acquiring customers, they also lived and breathed this. So one of their founders, Brian Kim, was the SVP of growth at Honey that got acquired by PayPal. Alice Wu, who was the CEO and co-founder, was the head of creative, digital creative and performance creative at Honey. And then there was another co-founder, Ari, who was the head of media at Honey as well. So the 3 of them started this business, and it took off right from the jump. Basically,
good timing.
Yeah. And they had this kind of really keen eye for brand content and performance content. And oftentimes there's this kind of perception that you have to make a trade-off of, you either get they call it like dirty DR, or stuff that works from a performance standpoint, but it doesn't meet the brand aesthetic, or you do something that's really brand centric, but it doesn't drive performance. And what Donut Studios does really well is they can straddle those two really well, where they can be on brand standards, they can elevate the brand, they can communicate the brand effectively, and also drive results through a video first approach. So anyway, that's a little bit of a long-winded overview of what Donut Studios was. We lost an RFP to them call like 9 months prior to me meeting them in the summer of 2024. And they were like a year old at that point. So I'd never heard of them. And it was one that it was an RFP that I was excited about. And I was pretty plugged in with that RFP. And we actually had gotten the verbal that we wanted, and then it got kind of pried out of our hands. Wow. And so I was like, man, what? I was scratching my head, because that doesn't happen very often, where you get the verbal yes, and then it goes backwards. And it wasn't anything negative about us. There was a lot of positive about the other party that got introduced at the last minute. And so started to study them from the outside. And I really just liked their approach. I liked their background. And it was at a TikTok conference in New York City in the summer of 2024. And I was there, and they were there as well. Ari and Alice, two of the 3 co-founders. And I just noticed them because I'd been studying them after taking this loss. And so I just went up to them. I was like, "Hey, nice to meet you. I'm Justin." And did the whole intro and was told them that I was really kind of excited about their business, and congrats on the win they had. And just generally that's my approach. Like even if we take L's, we do it graciously and try to build alliances versus enemies. And we had a really good conversation. And then I said, "Hey, if you ever want to trade notes, we'd be happy to do that at any point." And so we caught up about a month later, and then Alice on that call, I mentioned she's just thinking of starting to run a process, a really tightly controlled one with.
Even though they're only a year old?
They were, a little over a year and a half. Yeah, coming up on 2. Yeah. Okay. And so that was obviously that's a whole thing that was like, are you guys, that was one of the diligence items, is how serious are they about building an enterprise business? Like why exit so quickly? So there's a lot around that is probably another 10-minute story, but that aside, at least at that stage, it's like, I want to be at the table and at least have the opportunity to learn. And so they were kind enough to include us in this kind of tight set of 5 or 6 folks that they were.
If we can pause here, because I think it's so interesting. I'm curious about the red flag maybe that is raised for Insignia that you just mentioned. These guys are going to dump this thing on us and roll out, or whatever the concerns are. A, was that a concern? And B, can you talk about how maybe you constructed an offer for them that would minimize that concern?
Yeah. So I think it's always a concern, even if it's 1 year old or 20-year-old business or anything in between
Fair
that.
point.
Or, we're always looking for that yellow red flag of, is the founder or the key people of the business done, and are they just trying to exit and leave us with a bill of goods? And so, no different now. Obviously, this being a short time horizon, your kind of antennas up a little bit more than perhaps it would for a 10-year-old business or a 15-year-old business. So definitely an item that we wanted to diligence. And so a lot of questions, a lot of discussions. I think the way we try to approach any process where we're trying to be the lead horse, if you will, of kind of being front of the line for buyer of choice, is spend a lot of time with the management team and also get them to meet a broader group of our management team. So we spend a lot of time with the Donut team, the Donut founders, and trying to unpack the motivation, the why behind it. And it just became really clear the team was totally fine not selling the business if they didn't find the right home. But they were scaling really quickly. There are a lot of operational elements that they're builders, they're entrepreneurs, they're marketers, they're go-getters, and they don't want to spend time like a lot of their time thinking about like recruiting processes or HR policies or insurance or risk or things that are I think myself included, like I generally don't find that stuff very interesting. But as a scaled out enterprise, and John, who's our president, that's one of his many responsibilities. He's built a machine around that, a really robust foundation that we can, when we acquire a business, we can immediately provide those capabilities and infrastructure, if you will, for further scale. And I think they also realized that at the rate that they were growing, for them to continue that operational foundation investment was necessary and needed. And so they were more opportunistically evaluating the landscape. And if they found somebody that they felt could be a good home, they were going to be willing to do that. And we were one of the few that got to talk to them, and we hit it off immediately. And we, had a lot of conversations around the future and what they hoped for and what their ambitions were. And they're, Alice BK still with us and playing really significant roles in the company. And so it's worked out really well so far. We didn't do, I think you might be alluding to this, but we didn't do any like earnouts or, you hit this revenue and EBITDA number and you get, your payment. We try to stay away from that type of activity, and it's not always avoidable, obviously, because there's a number of factors that come into it, and sometimes the seller themselves needs some of that to capture a higher valuation and is willing to put their money where their mouth is and whatnot. So there are dynamics like that that come into play, but we generally try to avoid it because we want to create kind of a one team mindset or an enterprise mindset. And so our strong preference is roll over a significant share of your value of your business into New Engen stock, and let's win together.
What's significant percentage wise in your
mind? Generally 30 to 60% is where we like to ask our acquired businesses to invest, essentially. And sometimes it's higher than that. I don't think it's been lower than that, but that's generally where we like to kind of find that sweet spot. And that's also another signal that they're not here just for a quick cash out to leave, because you're basically, if that was the case, then you'd be comfortable leaving 30 to 60% of the value that you built, in someone else's hands, which I don't think anyone that's invested in the long term is usually willing to do it in that way.
Yeah. There's also, for somebody that wants to go down another rabbit hole, Crush Amazon, Matt, who's the founder of that business, was on a podcast earlier in the year, and he was going to double in 2025 and didn't want to build all the infrastructure around it. He just wanted to do Amazon work. And he talks about the reasons why. And in many cases, it's a little bit rare, but it is something that founders that are self-aware enough feel like, hey, a little bit of cash now and being on a bigger bus is a better route for us.
Yeah. Yeah.
When you talk about, just a quick side question, when you talk about influencer in UGC, a lot of brands or clients struggle to see the ROI on the attribution to that. Mm-hmm. Have you guys figured that out to get them comfortable with that? Or are they just relaxing more, knowing that somehow it's creating more value?
Yeah. Yeah. So I first from a kind of naming convention and definition perspective for clarity, I think influencer UGC understandably get used interchangeably, but I think there's two
different things.
Two different things, or there's overlap obviously, but they aren't exactly the same thing. And so UGC, user generated content. Let's take Donut Studios as an example. We have a ton of really talented in-house creators that are constantly producing net new concepts and video creative for our clients. And they're essentially acting, or they're acting out, or they're as authentic creators, but it's for paid purposes of driving performance. And then we run just like any creative content piece that you'd run Facebook ads or TikTok ads or Snap ads towards performance. We take the content that we produce, this user generated content, shot with a phone, vertical format, and are doing that day in, day out, Monday through Friday, sometimes Monday through Saturday. And so very performance oriented. And I think that's why that capability has been resonating, because that inventory on Meta, on Snap, on TikTok is growing like a weed. It's where the eyeballs are, and there's not a lot of performance oriented content that gets produced. That's also meeting brand standards. That's what Donut Studios produces. So so our ability to prove the ROI on that type of capability has been quite straightforward. On the influencer capability, definitely empathetic to that that argument, specifically if it's an organic play, and if it's an organic influencer, they post the content, and you're hoping that translates to ROI. That is a really hard problem in the industry. I think the way a lot of marketers are going around that, us included, is you put it through paid. You take influencer content, you run it through paid. You use affiliate codes. We also are doing a lot of interesting things with retail media networks and Walmart Connect, and as an example where we're able to target Walmart's first-party audiences in the open web with influencer content and track closed-loop measurement of the ROI on Walmart.com as well as Walmart in stores. And so there are kind of these attachments, I don't know if that's the right way to put it, but enhancements to influencer content that help bolster the ROI story. But the core use case, or the original use case of just like organically putting it out there, that's a much harder thing to track ROI around. And so there's a lot of kind of additives, if you will, that have been kind of introduced that we're leaning forward heavily into to prove that ROI story.
Yeah, I mean, when you look at the growth of TikTok now that its ownership and ability to operate in the U.S. has been resolved, if you look at TikTok Shop and how that's taking off, in today's Wall Street Journal, Meta reported they did $50 billion of revenue in Reels last year, right, in 2025. So I'm not asking you to justify it as much as I'm saying, wow, it seems like brands and companies are more comfortable that this is a viable and effective way to reach their end customer. Yeah,
100%. And I think of it as this is too exaggerative, so I even hesitate to say it, but just to make the point, social is increasingly becoming, I think, like the linear TV of decades ago, and in the sense that linear TV and that in 30-second spot, 60-second spot used to have a significant share of people's time and attention on a given day. And the TikTok algorithm, which Reels has their own version now, or Meta, Snap has their own version. That YouTube Shorts has their own version. Though that algorithm is increasing the time on app and time on specifically short form video content significantly. So I think it was Zuckerberg that said in the last quarterly earnings that video consumption was up 30% year over year across Meta properties. 30% for how penetrated Meta is insane.
It really is.
That is a significant amount of time, but it makes sense if you've ever been on any of these platforms with short form video content. It hooks you. Like, you're spending way more time than you want to admit on that platform. And so there's a lot of inventory opening up. So brands have to figure out, how do we provide really relevant content that can drive outcomes for a brand in that space. And so that's a high need that I think is 30% last quarter. I think that's going to continue to be pretty significant increases in media consumption, time on site, time on app in that format. And so going to be relevant for at least the next 12, 18 months, if not longer.
Yeah. And this is a great segue into maybe my final couple questions. So I'm going to ask you to take me back in maybe to the quarterly board meetings. You've been with Insignia now for 4 or 5 years. Most private equity, when they get involved, they think 5, 6, 7 years as far as a hold. My question is, are you guys having conversations around whatever it is, 26, 27, 28? Here's where we think the market's going to be. And if you're not strong enough in UGC or influencer or whatever it might be, we got to go get more of that. Mm-hmm. Or is it opportunistic that, that we came across a deck that came into Insignia, or a guy? How does that work?
Yeah. So every quarter, so if I go back to the last board meeting, we're putting together a broad POV on the industry, from what's happening with agencies in the ecosystem to what's happening with brands, marketing dollars, to what's happening.
You're doing that, or Insignia is doing that?
We're doing that. Yeah. And we provide that perspective to the board for alignment. Now, Insignia also gets access to a ton of these reports that they share with us as well. And so we're all kind of like trading notes constantly, but we're kind of then aggregating and summarizing that into kind of the most key points that are relevant to us as a business and where we need to head. So we're doing that on a minimum quarterly basis with multiple discussions in between. And so that's kind of our just general rhythm of how we work. And that's been the way New Engen's worked since the beginning, because we've always had a board of directors that we've had to be accountable to. And I think that's pretty standard content to put forth. In terms of how that translates to M&A opportunities and what we need to go after, I think as noted, Insignia has a team that helps support, build relationships with great bankers like yourselves and others in the industry. Also reach out directly to brands and businesses. But then there's also the reality of, you can have your game plan of what you want to acquire or what you think are the capabilities that you want to bring to the business. And then there's the reality of what's available in the market. Yeah. And so the perspective is really just that. It's the perspective, but rarely does the game plan actually go that way, right? Or does reality follow the game plan, I should say, because there's there might not be a business that fits exactly the profile you're looking for in terms of size, scale, ICP that they're selling to, or the capability. Then there's the math, and you dig into it, and then the forecast is looking soft into the next year, or is in question, or the personnel is can you work together, and can you actually build a business together? Do you believe in the shared vision? And so there's so many kind of checkpoints along the way that every time we get a really interesting book, I have to like level set myself that the odds of this happening are like 5%, maybe 3%.
It's hard to get deals done, man, right?
Yeah, really because there's just so many kind of reasons why it just doesn't make sense to do that deal both ways. And so there's always a vision and idea of what we want to do as a business, and there's reality of what we're actually able to do. But when we do find something that hits this, like a Donut Digital or Donut Studios now, that hits the mark of what we believe is really valuable to the business, we try to run aggressively, quickly at it, and spend a lot of time and lean in heavily to show that we're a worthwhile suitor, if you will, and can build something really creative.
Sure. And lastly, then, when you think about, we're just launching 2026. Mm-hmm. Are there things that are at the top of your priority list that you think would be interesting to consider as acquisition during the year?
Yeah. So, we're always, I think we're always going to stay on offense on content, media, measurement, like those, like, and even if there's capabilities that are overlapping with ours, like if we see an opportunity to enhance it, or where scale and size actually provides more value to our clients, then we're gonna absolutely pursue that. So generally always looking in those 3 pillars, but to not give you like a fluffy non-answer, just to answer more intentionally. I think there's a huge opportunity, I believe, in for New Engen and the industry at large of content for organic social in particular. So we've always come at things from a paid perspective. So everything we do is paid media, analytics around paid media, content for paid media purposes. And we're finding that the lines between paid content for paid versus organic content are starting to blur and become much more kind of come closer together. And so there's some opportunities in that space that we're currently evaluating that we think we'd be really excited about.
Justin, this was so insightful and helpful, right? It's helpful when somebody's as open and sharing as you are. So I want to say thank you for that. It's no surprise that, I've been privileged to know the guys at Insignia Capital, and they're a top tier private equity group, particularly in the lower middle market. So it's no surprise hearing, your command of the space, that it's such a good fit with them. So last question to wrap us up. 3 years from now, right? Then you're looking back. What is New Engen going to look like for you to be really satisfied with what you've built over the next 3 years?
Yeah. So it's interesting to be really satisfied. I usually don't think of the business from a personal satisfaction. And maybe that's not the root of your question, but more like what does the ambition look like and the vision that we're aspiring towards? And I think there's a number of things that I would include in that. But for one, I think I alluded to this in the M&A portion, but I think we have a right to play at a global scale. And I don't think I would have said that, last year or even, any year prior to last year. But clients are asking for us of this. I think a lot of our US clients are generally more globally oriented, have global customer bases, and the ability to be highly proficient at that kind of global AOR model, we think is a huge opportunity. And so that's the one that I'd really like the business to step into and make some meaningful ground over the next few years. Along with that, there's a lot happening in the agency ecosystem where, there's a lot of news obviously about holding companies and the thrash that's happened over the past year. And so for those that aren't as sharp on it, there's been a merger of IPG and Omnicom. WPP has had a challenging year with the CEO exiting and a number of client losses, if you will. Dentsu has talked about selling their US business. So there's a lot of thrash happening in holdco land. And I think with that thrash, there creates opportunity for, call it the bottom 50% or 60% of the customer base of these holding companies that don't want to put up with this thrash, that don't want to put up with an archaic model that is a number of acquired entities that are forced to work together on a single engagement and working in a siloed fashion. And a scaled out independent that can work with agility, with deep expertise and proficiency, with digital expertise and acumen. I think that's a big opportunity for that space. And there's if you count them, there's not that many that have this size and scale to service that call it enterprise, upper mid-market clientele, and do it really well across media, content, and measurement. But there's an increasing number of brands in that space that are fed up with the status quo and want something very new. And so, what I hope is not just New Engen, but a lot of our peers. I think it's good if we all thrive
Do well together. Yeah,
all those right. Yeah, we create a new model for what a marketing services, marketing agency function can look for, kind of that segment of businesses, and put the model, or reinvent the model, if you will, or iterate on the model significantly to provide ultimately a better client experience than the one that they're getting right now.
Well, it will be great to watch the evolution of New Engen. We'll keep our eye out for you guys in the news and your growth. Thank you again for participating, and best of luck in 2026.
Yeah, thanks, Todd. Appreciate your time.
Thanks for listening to the Second Bite podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.